Hey everyone, welcome back to Corporate Decoder, the place where we try to find the hidden gems and the not so hidden gems in these massive piles of corporate paperwork. Oh boy, do we have a doozy today. It involves water and walls and a lot of numbers, so buckle up. So we are diving into the latest quarterly report from Watts Water Technologies Inc. for the period ending the 28th of September 2025. Think of it like a snapshot of the company's financial health 3 months at a time. If you like digging into these kinds of reports and getting the real story behind the numbers, make sure you are subscribed and join our growing community on Discord, linked in the description below. Let us kick things off by looking at how many shares of the company are actually out there. As of late October 2025, Watts Water Technologies has about 27.4 million shares of Class A common stock and nearly 6 million shares of Class B common stock. These are the pieces of ownership in the company that people can buy and sell on the stock market. Alright, let us get down to the numbers, the heart of this report. This is the consolidated balance sheet comparing the end of September 2025 to the end of December 2024. First up, assets, what the company owns. Total current assets currently stand at $1.3 billion, up from about $1.1 billion at the end of last year. Current assets are things the company expects to use or sell within a year, like cash inventory and money customers owe them. Then we have property, plant, and equipment, that is the buildings and machinery the company uses to make its products. This is sitting at around $267 million net after accounting for wear and tear, also known as depreciation. This has increased from about $255 million. Now, this is always interesting goodwill. This represents the extra value of companies the company has bought beyond just their physical assets and customer lists. It has jumped from $715 million to over $781 million. This tells us they have been busy buying other businesses. Overall total assets have grown from $2.4 billion to over $2.7 billion. That is a healthy increase, showing the company is growing its holdings. Now let us look at liabilities, what the company owes. Accounts payable are basically bills the company needs to pay to its suppliers. They are about $156 million in September 2025, up from $148 million. Long-term debt is a big one. This includes money borrowed that needs to be paid back over time. It is hovering around $197 million for both periods. Not a huge change there. And finally, stockholders' equity, the net worth of the company after subtracting what it owes from what it owns. This has seen a nice bump from $1.7 billion to almost $2 billion. That increase is mainly in retained earnings, which is money the company has made and kept over time. Moving on to the statement of operations, this is where we see the company's performance over time. Looking at net sales for the third quarter of 2025, it was $611.7 million, a good jump from $543.6 million in the same period last year. For the first 9 months of the year, sales are up to $1.8 billion from $1.7 billion. That is a solid increase in sales across the board. Gross profit is what is left after the cost of making the products. This has increased nicely from $257.1 million to $298.4 million for the third quarter. That indicates they are either selling more or managing their production costs better. And the bottom line net income for the third quarter, it was $82.2 million, up from $69.1 million last year. For the 9 months, combined net income stands at $257.1 million compared to $223.6 million. These are strong improvements, folks. When we look at earnings per S-share or EPS, which is what each share of stock is theoretically earning, it has also gone up. For the third quarter, basic EPS is $2.45, up from $2.07. Diluted EPS also saw an increase. Now let us briefly touch on comprehensive income. This includes not just net income, but also other gains and losses that are not directly reflected in the income statement, like adjustments from foreign currency translations. Both net income and total comprehensive income have seen positive movement, which is good news. This is the statement of stockholders' equity. It shows how equity has changed. You can see the increases in additional paid-in capital and retained earnings, which we touched on earlier, supporting that growth in overall equity. And the statement of cash flows. This shows where the company's cash is coming from and going. Net cash provided by operating activities as of September 2025 is $247.3 million, up from $221.6 million the previous year. That means their core business is generating more cash, which is a very positive sign. In investing activities, we see the company spent $85.7 million on business acquisitions, net of cash acquired in 2025. This ties into that increase in goodwill we saw earlier. They have been actively acquiring other companies. Financing activities show payments related to debt dividends and stock repurchases. They used $74.5 million in financing activities in 2025 compared to $156.2 million in 2024. This shows they are not borrowing as much to fund operations. Alright, let us delve into the notes. These are crucial as they explain how the financial statements were put together and what accounting rules were followed. The company is following standard accounting practices, and in their opinion, these statements present a fair view. They also mention their fiscal year ends the 31st of December and they operate on a 52-week cycle. This section talks about recent acquisitions. On the 13th of June 2025, they bought Easy Water, a company specializing in water quality solutions. And back on the 2nd of January 2025, they acquired Icon Systems Holdings, a company focused on intelligent plumbing controls for correctional facilities. These acquisitions are adding some serious intellectual property, like customer relationships and trade names. They also acquired Josam Company effective the 1st of January 2024, a drainage and plumbing products manufacturer. These acquisitions are clearly part of their strategy to grow and expand their offerings, especially in the Americas. Here we get more detail on that goodwill and intangible assets. The goodwill, especially in the Americas segment, has grown significantly due to these acquisitions. They assure us they test for impairment annually, meaning they check if the value of these bought companies has dropped. This section details restructuring charges. A big one for 2025 is the 2025 France Actions program that involves shutting down a facility in Hautevillers, France. They expect about $22 million in pre-tax charges for this. This is a significant move to streamline operations in Europe. Here are the earnings per S-Hair numbers we saw earlier. They also talk about their stock repurchase program. On the 31st of July 2023, they authorized buying back up to $150 million of their own stock. As of September 2025, they still have over $133 million available for repurchases. This shows a commitment to returning value to shareholders. This covers stock awards given to employees and directors. They grant deferred stock awards, performance stock units, and restricted stock units under various plans. This is a common way for companies to incentivize and retain key talent. This is a big one, disclosing how the company operates across its different segments. They have Americas, Europe, and APMEA, Asia, Pacific, Middle East, and Africa. They break down their sales by these segments and by distribution channels like wholesale, original equipment manufacturers, specialty, and do it yourself. It is a very detailed look at where their sales are coming from. For the third quarter 2025, Americas accounted for the vast majority of sales at $464.1 million. Looking at the third quarter results from 2025, Americas sales were $464.1 million and Europe was $111.6 million, while APMEA was $36.0 million. This shows a clear dominance of the Americas market for Watts Water Technologies. The report highlights organic net sales growth. For the third quarter, Americas saw a 13.3% organic growth, while Europe declined by 2.3%. This suggests the Americas market is performing really well for them. Gross margin for the third quarter improved to 48.8% from 47.3% last year. This is a sign of increased profitability on their core products. Selling, general, and administrative expenses also increased, but the report states this is due to investments and acquisitions. They break down the increase of $26.1 million across organic, foreign exchange, acquired, and special items. The restructuring charge for the third quarter of 2025 was $1.9 million, primarily related to that French program. This is down from $4.9 million in the prior year, which included some pension plan settlements. Overall, operating income for the third quarter of 2025 was $111.4 million, up significantly from $93.2 million in the same quarter of 2024. This increase is largely driven by the strong performance in the Americas segment. Looking at the 9-month period ended September 2025, net sales are $1.8 billion. The Americas segment is the largest contributor at $1.38 billion. Gross margin for the 9-month period also improved to 49.4% from 47.3% last year, a great sign of improving efficiency. For the 9-month period, operating income stands at $334.4 million, a substantial increase from $301.4 million in the prior year. Now let us look at cash flow. Free cash flow, which is cash generated after accounting for capital expenditures used for growing the business, has increased to $216 million in the first 9 months of 2025 compared to $204.2 million in 2024. This means they are generating more cash than they are spending on maintaining and expanding their operations. And what about debt? Their net debt to capitalization ratio is actually negative at negative 15.3% in September 2025. This essentially means they have more cash than debt, a very strong position to be in. They also discuss financial instruments. They use things like interest rate swaps and foreign currency hedges to manage risks. These help protect them from unpredictable market swings. They are not using these for speculation, simply for protection. This section deals with potential future problems like lawsuits or environmental issues. While there are some matters they are monitoring, they believe none are likely to have a material adverse effect on the company's financial condition. This is reassuring. This is where we find events that happened after the reporting period ended. Notably, on the 3rd of November 2025, they declared a quarterly dividend of $0.52 per S-share. And on the 4th of November 2025, they completed the acquisition of Hawes Corporation, a company focused on emergency safety and hydration solutions. This indicates continued growth and commitment to shareholders. Looking at the results of operations section, we see a clear story. Sales are up across the board, especially in the Americas. The company is successfully passing on price increases and benefiting from higher volumes. This sentence really sums up the success in the third quarter. They are seeing gains from better pricing, higher sales volumes, and improved efficiency, while also managing the headwinds of inflation and tariffs. The operating income increase is substantial, over 19% year over year for the third quarter. This is fueled by strong segment performance, particularly in the Americas segment, and the net income figures confirm this positive trend with a solid increase in both earnings and earnings per S-share. So what is the big picture here? Watts Water Technologies Inc. appears to be in a strong financial position. They are growing revenue, expanding through acquisitions, and showing improved profitability. Their balance sheet is solid with more cash than debt. The company is effectively navigating market challenges like inflation and tariffs by increasing prices and focusing on productivity. The recent acquisitions and the proposed dividend indicate confidence in future performance. Looking at this filing, I would say Watts Water Technologies is a company with a clear strategy that is executing well. Their focus on water management and safety is a strong market position, and their recent moves show they are serious about growth. The Americas segment is undoubtedly the engine driving current success. The continued push into smart and connected products is also a smart move in today's tech-driven world. However, it is always wise to keep an eye on those international markets, particularly Europe, which showed a slight organic decline in sales. While their debt is well managed, the pace of acquisitions could eventually put pressure on those relationships if not carefully managed. Overall, this report paints a picture of a financially healthy and strategically sound company. The execution of their growth plans, particularly in acquisitions and product innovation, appears to be paying off. Alright, that is our deep dive into the latest filing from Watts Water Technologies Inc. What do you think of their performance and future prospects? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more insights from the world of corporate finance. And do not forget to join our Discord community linked in the description for discussions and more. Thanks for watching, and we will see you in the next video.